insurance companies and the importance of specific insurance companies, how to compare plans, some definitions, the importance of definitions, cost sharing, and then we'll talk a little bit about the university requirement, and the premier plan specifically will be discussed throughout this. So when I have examples, I talk about the premier plan because I really only know the details of the premier plan. And in the end, we'll have time for questions, but I also want you to feel free just to try to keep things going and keep you engaged, to ask questions throughout, unless we're going to talk about it a little bit later or I feel like I'm running out of time. So we'll have an opportunity to ask questions at the end, but please raise your hand, and if you have a thought, I don't believe there's any question that shouldn't be asked, so please feel free to do that. Should you care what company insures your plan? I've given you the answer, yes. For example, consider the two descriptions below of insurance plans. Which plan would you choose? Now you need to read maybe some of the fine print to make a good decision. The first one would be United Healthcare, a comprehensive plan for $2,680 per year. Another plan to consider would be Laura Hartman Crosby's plan, a comprehensive plan. You've probably never heard of it before, but it's only $1,000 per year. And if you'd like to stand in line, I'll be happy to take your cash. I know what I'm doing about insurance, so just line up here and we can see what I can do for you. And that's actually not that far-fetched in the past. Now there's a lot more regulations today, but in the past, I mean, what's a fully funded plan or a self-funded plan? It's gathering money. I like to say we're taking from the rich in health and giving to the poor in health. You're getting that money up front and you're redistributing it. So, you know, why not just gather a bunch of money and say, all right, I'll pay your claims. Well, it might turn into a Ponzi scheme. You want to be careful about what insurance company you're using, and you want to be careful about what plan as well. So we're going to talk about some of those things. So the premier plan, the plan that Georgetown offers, is underwritten by United Healthcare. Most people are probably familiar with United Healthcare. It's a very reputable company, very well known. It's been around a long time. It has, I think I had it in the fine print. Nope, wrong one. In 2014, it had an AM Best financial rating of A, so it has a good financial rating. You can look up what it is. You can search that on the web. I don't think you will find my plan on the web, and I can promise you the financial backing isn't very good. So, yes?
What is AM?
It's one of the financial, I forget what it stands for, but there are different financial institutions that rate financial companies, or institutions that rate financial companies. And that is AM Best is what it's called.
Okay, so if I looked at AM Best,
you would
Aetna, United, etc.
You could probably find it there. And some other Standards & Poor's, and there's other ratings that you would find. And when we go out to bid, that's, so the university goes out to bid and says, you know, we want something that's financially stable. And there aren't that many companies doing group plans anymore, just because of, the market has constricted since the Affordable Care Act. But we'll talk a little bit more about the Affordable Care Act. I'm jumping ahead. The premier plan is fully insured by United, so it's not self-funded. And that means that United holds the financial risk, unlike maybe a self-funded employer plan.
Got other questions?
Okay, so the second point is what I wanted to, but I want to make sure I make the second point. So, if the insurance company charges $2,680 for 12 months of coverage and we collect all that money and we give it to them, and the claims, because this is fully insured plan, the premier plan, and the claims exceed that cost of the premium per person, we don't care. United Healthcare is financially strong. They took the risk. You're still only paying $2,680. They will pay your benefits. That is a fully insured plan. They hold the financial risk. Now, if I do a Ponzi scheme, or if there's an employer plan collecting all the funds, and they have a plan, they're holding the financial risk. Now, there's laws. ERISA is one of laws, a book about this big, of all the laws that an employer plan has to follow to make sure that they're financially sound. So it's not to suggest that it's not financially sound at all. There are all kinds of regulations for employer plans. So you can feel confident about them. I'm not here to scare you about that. But United Healthcare on the premier plan holds the risk. No, this is not.
Aaron, did you have a question about that last
Okay.
slide, or?
Yeah, so are employer self-funded plans common? Is it only with like?
Absolutely.
corporations?
More common than, large employer plans. The Georgetown self-funds. And there's a point of where you would, smaller plans would not self-fund. Because you need a large group, in order to make the risk stable, you need a large group of people. You don't want to, if you're, have unlimited benefits, and there's one claim in your group, and you only have 20 employees, you won't have a group plan for very long. So that's, so that small business employer plans, for years that's been a challenge. But large employer plans have lots of reserves and trusts and things like that to protect that money, with regulations and fiduciary responsibilities, and far more complex than I know, beyond my knowledge.
So all Georgetown plans are self-funded, or most?
I don't know. Because I do the student side of business. I don't do the employer side. There might be a fully funded, I don't know, but you could find out easily enough. And self-funded plans are great. Don't misunderstand that. In fact, DC doesn't allow the student plan to self-fund, but we're a large enough group that we could, but we're not an employer, so we can't, by DC law. Some states allow it, but DC doesn't. So, how do we know if plan is a good plan? So that's another very basic question. You want to compare plans, and there are thousands and thousands of plans. They're all different. I can't, and frankly, I can't figure it out. So, however, the Affordable Care Act that was passed in 2010 recognized that people really can't figure that out very easily. So they came up with a method in easily expressing the value of a plan. And they have created metallic ratings based on actuarial values. And the metallic ratings of ACA, Affordable Care Act, compliant plans. So this is just plans in the US. The highest plan is platinum, then gold, silver, and then bronze. So what is actuarial value? I'll read this because it's easier to read. Actuarial value is the percent a plan is expected to pay out for the average cost of essential benefits. the benefits for treatment you would expect to be covered for the entire group. So here's a question, and when you're trying to compare plans, which plan is better? Is it better to enroll in a plan with a per visit charge of $75 or one that pays 70% of a visit charge? Well, you don't know what the visit charge is, and you really don't know. But you don't have to know. Because an ACA compliant plan has a metallic category that explains what the value is. So you don't have to worry about that anymore. And the Premier plan is a platinum plan. So it's the highest metallic rating. So it's comprehensive. And I'll just throw this in because I'm so accustomed to saying it's worldwide coverage. It's a national PPO network. So it's a very good plan. So now let's talk about definitions. Not all definitions are created equal. Should you care about definitions? Yes, you should very much care about definitions. And when you're looking at a plan, you need to look at those definitions. So here's a couple of definitions. And you ask yourself, which definition below equates to excluding pre-existing conditions? And not know to look for our pre-existing conditions covered or not by looking at a definition of sickness or injury. Definition number 1, sickness means sickness or disease which causes loss while insured. Definition number 2, sickness means sickness or disease which causes loss and first manifests while insured. So imagine if you had asthma and you had it when you were 2 years old and you picked up a plan that had the definition for number 2. So your asthma manifested when you were 2 years old. You pick up the plan, you have an asthmatic episode that causes loss while you're insured, but it didn't first manifest while you were insured under whatever plan that is. It manifested when you were 2 years old. That's a pre-existing condition by definition. It doesn't actually have the word pre-existing condition. All right?
I have a question on that.
Yes.
So let's say I know I have asthma, correct? So if I get a new job and they have me go through my insurance and they ask me if you have any pre-existing conditions, is there a risk with saying I have asthma, or like what I'm saying is that like it can be unsure if it'll like hurt your coverage, or you're kind of concerned about it. What should you do? Or you just have to tell them how it will affect your coverage. Does that make sense? So
Well, the employers are not asking about pre-existing conditions. And let me go to the, and ACA compliant plans cover pre-existing conditions. So you really only have to worry about that if you find it, and they're not that easy to find, a plan that's not ACA compliant in the United States. There are short-term plans that do not have to be compliant, travel plans, and overseas plans. But your employer should not be asking you about your health.
Okay.
So what's going to happen is you will have a condition like asthma, and you'll go to the doctor and you'll submit a claim, and the insurance company is going to look at that claim and say, I wonder if this is the first time this person has ever had an asthmatic episode. And you know, and they have so much data, and most likely, I don't know that much about asthma, so, but let's just assume that the protocol is typically, it shows up in 2. I'm making these things up. So they would know that, and they would deny it and ask you to, maybe provide some medical records. And when you went to your doctor, hopefully you told them the truth, and there would be medical records there that said you've had it since you were 2 years old. And that's how they would determine. For the longest time, I didn't complain about my knees to doctors because I was worried about pre-existing condition. And I mean, decades, I never would talk about my knees. But it's covered now, ACA compliant plans. And I think they know, they can hear my knees. So I think they know that it's been like that for a while. So it depends on what the condition is. So the Premier Plan does not exclude pre-existing conditions. In fact, it has not since this millennium and before, but ACA requires that ACA compliant plans cover pre-existing conditions. So since 2010, ACA compliant plans also cover pre-existing conditions. So if you're looking at a US ACA compliant plan, you can feel confident that pre-existing conditions are covered. So yes,
So besides the ACA compliant, what other credentials and certifications or signs we should look for when we're looking at insurance plans?
so the certifications for ACA compliance, every policy is filed in each state to the insurance commissioner of each state, and so they're in charge of determining compliance. So it's the insurance companies send their documents to an insurance commissioner in each state.
So it's like state by state?
Yes.
Okay. Is there some sort of like national database or anything?
Not to my knowledge, no, I don't believe, not to my knowledge that there's a national database about compliant, ACA compliant plans. Now, ACA compliance is a federal
Right.
law, and companies don't want to be non-compliant, and they don't want to misrepresent what their plans are, because they would have the federal government bothering them. So I don't know the ins and outs of that detail on that side of the business, but they file all these plans with the state commissioners.
Okay.
Okay. So we'll talk about medical emergency defined. And the point I want to make here is, don't go to the emergency room unless it's an emergency, because the insurance companies might not pay for it. And urgent care in this area is very much available 24/7. So if you have something that, I tried to think of, some things that don't seem like emergencies can be emergencies, but I'll just call, let's say, I remember a long time ago, somebody went to the ER for a hangnail. And they denied it. Now, a hangnail, if you've ever had one that's really infected, can just make you want to cry if you bump it, and you really feel like your hand might fall off. But, and I don't know the details of that particular claim, but it was denied, and it was hard for me to sort of suggest that maybe it was a justified emergency, and I really don't know what the outcome of that appeal was. But I think an urgent care facility would have been the more appropriate place for a really infected hangnail, maybe rashes, things that you really don't want to wait until Monday. It's over the weekend, the student health center is closed, and strep throat, and it's getting really bad. Urgent care would be the place to go. And when you go to the emergency room, they will queue you up according to the seriousness of what you're presenting, and you might stay there all night because it's not serious enough, and so you will wish you hadn't gone if you went with something that's not really an emergency case.
Where's the nearest urgent care? Do we have one on that?
So with the United Health, with this insurance plan, you can look it up online and see where they are. And you can just look it up online, any urgent care online.
You really should check out some of your insurance though, if it's outside of your network, that could be massive
True.
amounts of money. They
Right.
just don't cover it, so if it costs $7,000 to fix that hangnail, and your insurance says, well, you just didn't go at network, and the receptionist didn't tell you it wasn't a network, you owe them $7,000.
Yes, thank you, that's really important.
If we don't have the Premier Plan with the university, can we still go to the Student Health Center?
Yes, all students can go to the Student Health Center. They bill most, insurances. the Student Health Center is part of MedStar, and they have contracts with many different insurance companies. So you'll need to check and see if they're in network with your insurance company if you're not on the Premier plan. But you can also just pay out of pocket. If it's out of network, you can, you know, they'll bill you. So, but you can, any of the students can go to the Student Health Center. So let's read this definition to give you a better idea of what an emergency is. Sudden or serious and unexpected, a condition in which a reasonable person would believe the condition would result in death, jeopardy of health, serious bodily impairment, to include the fetus. So it needs to be jeopardy of health, serious bodily impairment. That hangnail might have caused a lot of pain, and a finger might have been in jeopardy. I don't really know. So, you know, things can be argued, but that is the criteria for a reasonable person.
I want to note something else. So I went to the ER for a bike accident and smashed out a couple of my teeth. And they're like, we don't have a dentist here. You need to find yourself a dentist. So they won't always have everything there. And I had to wait till the next morning to find a dentist. So you need to make sure it's within your network, but also that they have the people there that you need. So you might look that up. I mean, it's an emergency, you may not have the time. Like, does Georgetown have a dentist? Maybe George Washington does. Maybe this one does. If you know what the problem is. Just FYI.
So what's covered by the Premier plan? The ACA, Affordable Care Act Essential Benefits. So ACA has a list of essential benefits that is probably several pages long. But it basically represents what you would expect a comprehensive plan to cover. Outpatient, inpatient, emergency, maternity, mental health and addictions, prescription drugs, rehabilitation, labs, preventive, and ACA benefits also must cover some specific pediatric benefits, which include dental and vision, which the Premier plan does not cover for students. So the Premier plan is only a medical plan. It is not a dental and vision plan. However, there is a dental and vision discount network that you have access to when you have the Premier plan. Yes.
I have a question. So when you say it's covered by the Premier plan, does that mean you pay nothing when you go to the ER? Like, how does that work?
So there, seldom do you pay nothing.
Okay.
All right, so there's cost, what we call
Okay.
cost sharing.
All right.
And I will get into the details of that here shortly, but with ER specifically, there is some information on here. So the deductible applies under Schedule 2. So when you go to the emergency room at Georgetown University Hospital MedStar, that it would fall under Schedule 2 in the Premier plan. There's 3 schedules. You get all 3 levels. You have 3 levels of benefits. If you go to the Student Health Center, you essentially pay $10, and then everything is paid for, including labs that can be very expensive. If you go to the United Healthcare PPO network, that includes the emergency room at Georgetown University Hospital. There is a $200 plan year deductible that you are responsible before the plan pays anything. So that would apply in the emergency room. And then the plan pays, and there is also a co-payment, which we'll talk about what a co-payment is in a moment. There's a $100 co-payment, and then the plan pays 100% for emergency services. So if you had not had any services under this plan and you went to the ER for the first time, that's your first service, you would, and it was a $300 bill, you would have to pay the full $300. $200 of a deductible per plan year and a $100 copay. If it's $1,000, then you would be paying $300, and then the plan would pay the other $700.
Wait, so you're saying the first time you go, you have to pay 200? It's 200 max you pay a year?
per year,
Per year?
per
Okay.
year,
So if I want to go the second time, I'll just have to pay the $100 copay?
correct.
Gotcha.
But you shouldn't have that many emergencies.
Right.
And if you go to the student health center, that deductible is waived.
Okay.
So you don't have to pay it at the student health center. So on the better question is what's not covered under the premier plan. So as I mentioned, dental insurance is not, eye care, dental care. Also make sure you know what your exclusions are. Read your exclusions. High-risk activities such as skydiving, it's not covered. Medically unnecessary treatment such as cosmetic surgery is not covered. So it's fairly standard for plans to only cover what's medically necessary, not just what you want. Might want to work on my nose, but no, they're not going to do that. Okay. Read your plan documents. It is your responsibility to know what your plan covers. All right. What is a copay? A copay is a fixed amount you pay for your healthcare services during your visit, before you actually have the services rendered. When you go up to the desk and you give them your copay. At the Student Health Center, it's $10 if you're sick. It's free if you're not sick. That's one of the ACA preventive benefits. The preventive services are free of charge. So it's interesting, you go there and have your annual exam, preventive exam, and it doesn't cost anything, but if you go there with a sore throat, it'll cost you $10. And you pay it on, date of, DOS is a phrase used for date of service, some lingo.
With a particular, I know with my particular type of, my plan, I'm with Aetna.
Yes.
And I went to, Johns Hopkins once in Baltimore, and, my mom had me look at like the reason why the copay actually differs, and I wanted to know, like, with this plan, is it, like the certain type of doctor or service, does the copay differ?
It does. Good question.
So more specialized doctors
A
cost
higher copay, that's right. So with the Premier plan, you'll see some of those copays here. This is just kind of a quick cheat sheet, and the way I have it set up is there's the deductible amount and then a slash. Then the middle number is the copay amount, and then a slash, and the last number is what's called co-insurance, and we'll talk about co-insurance in a minute. So you'll see these different visits. At the Student Health Center general visit, it's just a $10 copay with no deductible. You'll see if you go outside of the Student Health Center under the PPO network, there's a $25 copay to go just to a general primary care physician, $40 for a specialist, $50 for urgent care. Emergency room, $100. So it does change on this plan. And that's to encourage you to go to the place that's less expensive when convenient. So you don't want to go to the ER if you can go to the Student Health Center. Yes?
For the Georgetown insurance, how many types of plans do you offer?
So I represent the Student Health Insurance Office, and there is only one
There's one.
comprehensive student plan. Now there's a couple other plans that we administer for different purposes, and it's a study abroad plan for when you go abroad. And there is what we call the stint plan, which is a short-term plan for incoming international students that are just here for a very short period for special programs. So, we don't sell insurance. We offer this one plan. If the plan doesn't meet anyone's particular needs, then they should go shopping and see if there's another plan that better meets their needs, and they can waive the
So
premier plan.
For the general students, there's only one type of plan that's offered.
There is one plan, the premier plan, that is posted to the student's account and that you're required to purchase if you don't have other coverage that meets our minimum standards. And so that's the only one that Georgetown offers. And then you can, you know, and if that isn't what you want, then you can go shopping. But we don't, you know, we're not licensed to sell insurance, so we don't sell insurance.
So about the waiving, so, if you looked at your financial aid on My Access, there's a survey you have to answer, but then you'll waive the insurance. That's what this is talking about.
Right.
So, if you have the insurance that your parents that you submit, and if it meets those standards, then you don't need the Georgetown insurance, otherwise it's automatically posted to your account, you must refuse it if you have the right insurance. Does that make sense?
Yes.
Very great.
No, I understand. I was just,
Okay, great.
I was just wondering, does the insurance office offer more than?
Not to speak of, no. You know, again, there are these other plans for different purposes, but for the general ACA compliant type plans, no, there's just one.
Okay.
And one of the reasons, what happens is if you offer two plans, one that's really rich in benefits and one that's really not, let's say, inexpensive and expensive, and assume that it's associated with the richness of the benefits, then all the healthy people that don't really need insurance buy the inexpensive one. All the sickest people buy the one that's rich in benefits, and then over time, that's called adverse selection, and over time, basically, the one rich in benefits can't really exist anymore because it's, nobody's gonna buy it because it's too expensive. So, having one plan keeps the pool of insured sort of both healthy and sick pool of insureds, and we take, again, from the rich in health and give it to the poor in health. All right, what is a deductible? We touched on that briefly. In the Premier plan, it is a plan year deductible. At the Student Health Center, it's 0, so it's waived. At the PPO network, the National PPO network, there's thousands of hospitals and doctors in the United Healthcare PPO network across the country. Those are providers and hospitals that have contracts with United Healthcare. They've agreed to deep discounts, very deep discounts. They can be as much as 40 to 50%. So that's really important to stay within the PPO network to save your out-of-pocket costs. When you go there, there is a $200 plan year deductible. If you go outside of the PPO network anywhere in the world, as well as in the United States, there's a $250 deductible, just $50 more. So if you stay in network and spend, the $200 that you met in network applies to the $250, so it's just $50 more. There is also a separate $150 deductible for prescription drugs. What is coinsurance? So coinsurance is that percent. When I was describing the legend here, the first amount was the deductible, the second amount was the copay, and the last amount is a percentage or a percent. Generally speaking, with the 3 schedules for the Premier plan, if you go to the Student Health Center, they pay 100%, you pay 0 in terms of a coinsurance. When you go to Schedule 2, the PPO network, generally speaking, the plan pays 80%, you're responsible for 20% of deep discounts. That's that discounted amount. So that's really important. Discounted amount of 40, 50%. So when you pay that 20%, it's 20% of a much smaller number. If you go outside of the network, then you're paying 30%. The company pays 70%. 30% of what's reasonable. Anything over and above reasonable, you're also responsible for. So that's that 40 to 50%. Well, you're paying 30% of what's reasonable and anything over and above that. So when you're in the United States, to reduce your out-of-pocket expenses, you want to stay in Schedule 1 or 2. Go to the Student Health Center first, go to the National PPO network second, and then anywhere else third. And when you're traveling outside of the United States, it's going to be Schedule 3 at 70% reimbursement. Will insurance pay a percent of any charge? So I kind of explained that already. No. It must be, the charge must be reasonable. So for example, is it reasonable for the insurance company to pay 80% for a visit that typically costs $100, but the boutique physician charges $1,000? No, that's not reasonable. The insurance company pays 80% of the preferred provider organization discount rate, that up to 40 to 50%, or if it's an out-of-network provider, it's 70% of the reasonable rate referred to as the usual and customary. Will the insured pay a percent, that's you, the student, pay a percent of any charge? Yes, and then some. So that's why you want to stay in that Schedule 1, Schedule 2 to be careful about your out-of-pocket expenses. If you go to an out-of-network provider who does not have a discount contract with the insurance company and can charge whatever the provider wants, you are responsible for the balance that is not paid by the insurance company. 30% of reasonable and anything over and above reasonable. So that's what so it's been said twice. And that when you pay that 20%, it's of a deep discounted rate. So you want to stay in Schedule 1 or 2. How do I find Premier Plan preferred providers? They're online. There's a very nice website, and the URLs are on the back here. The Student Health Center is, and I can't really overemphasize this, the Student Health Center sees students, and that's all they do. They really are the experts and for this age group. So you should go to the Student Health Center, especially whether you're on the Premier Plan or not, but especially if you're on the Premier Plan, because you'll probably pay $10 and that's about it. And they bill for their labs, and that could be $1,000 right there, and it's paid at 100%. So you will really reduce it. Now they're primary care physicians, but they see your age group, and that's all they do. Also, in terms of referrals, you don't, in the Premier Plan, you don't have to have a referral for most services, but in my experience, if I go out by myself, and because I go online and I find a specialist, I know nothing about that specialist, I've had a horrible experience doing that. I walked into a dirty office that I didn't want to touch the furniture, and I was surprised. Well, the Student Health Center is not going to refer you to those places. They know who the specialists are. They know who the good doctors are. So even if you have something where you need a specialist but you don't know who to go to, make an appointment with the Student Health Center, talk to them. Maybe they can treat what you think is you need a specialist for, but if not, they're going to refer you to a good specialist that most likely is in the MedStar network, because they're all, and they can look at those records. So maybe you have to go to a specialist, but you can go back and do some labs at 100%, and they can look at your records, excuse me, online. Yes?
So you mentioned the Premier Plan doesn't offer dental or vision. What are other ways that we can get coverage?
So the Premier Plan does not offer dental or vision insurance. And I believe that voluntary dental and vision is not a value. What happens with voluntary is much like the adverse selection I described with a high and low plan. The students who, or anybody who needs dental, buys voluntary dental. The price just keeps on going up. We have seen that with a voluntary plan that the broker offers the students. And so over time, it's just not a value. So what we consider a value is the discount networks. So that's just the nature of voluntary. And that's why the mandatory requirement is so important, that everybody has insurance, so those who really need it can have access to insurance that's reasonably priced. Do you need to reapply for health insurance every academic year? So every year we go through this open enrollment process. You are charged for the Premier plan, and you either accept or waive. If you have other coverage, you fill out a form online and let us know what that other coverage is. It's mostly the information you'll find on your ID card, but we will go through this every year. The other, and you want to make sure that you know what your other coverage is and that it is going to meet your requirements, because after open enrollment, you cannot choose to enroll in the Premier plan. So you can't change your mind in mid-year and say, this insurance that I had that I used to waive with isn't really meeting my needs. I want the Premier. You can't do that. You have to do it during open enrollment. Now, an exception to that rule is if you are involuntarily dropped from your other coverage due to age or employment, then you have 31 days to apply to the Premier plan, and you can enroll with the effective date being the day after you were dropped from your other coverage. So there's some limitations on when you can enroll as a late enrollment.
So do you, will the school ask for proof and like dates and all of that you've been dropped?
So for a mid-year enrollment or to waive. So in both cases, we ask for a lot of proof, but for the mid-year enrollment, yes, we ask for the insurance company's letter of termination, and we ask for very specific proof, and it'll have the dates, and it'll have to be within that 31-day period window, and if it is not, then you are not eligible for a late enrollment. Yes?
And so you mentioned that the insurance is 12 months, so a whole year. So even when we're outside of school, we have this insurance all over the country.
I love that question, yes. So this is, again, worldwide coverage. It's within the country, it's the United PPO network. So when you go home for the summer, you still have insurance. And if you find a United provider, you go online, you find specialists by zip code, city, lots of different filters to find somebody in your area. So yes, you have coverage when you go home, even if you go to even if your home's another country.
It's a quick note, I was told there's another class coming at 6, so I want to make sure we get everyone's questions.
Thank you.
And I also wanted to mention, as a quick side note, you always read your bills that you get, even if you think that was covered or something. So when I was at the hospital for my bike accident, they then billed me for $12,000 of x-rays, and I'm like, my insurance covers that. So I called them and they said, oh, our computer just never sent it to your insurance company, so I didn't get a response from my insurance company, so they just billed it to me. So you really got to check out all the bills you get, and always call if something just feels off or wrong.
Yes, and even more specifically, there's the insurance company will issue what's called an explanation of benefits, and most companies now have online access to that explanation of benefits. What that means is it's a statement saying, we received this bill and we did X, Y, Z with it. And if you have claims that you want to track, you go to your insurance company's online access and you see what was sent and what they did with it. And sometimes they'll deny it because they want some medical records, but you don't even know that because they sent that to the provider. Well, you might be able to hasten that process if you're concerned about it. And then when you get those bills from the provider, you want to compare that to that explanation of benefits, and just like Melissa said, oh, they never even received this bill. You could see that, they never received it. I already have insurance, do I still need to apply for the university's health insurance? So we require that your other coverage, there's a short list on our website of the benefits that you have to waive. And one of the big benefits, or one of the big things we look for, is that you have coverage in the DC area. So, and more coverage is becoming regional. these days. So that can be a bit of a challenge, but you want to make sure that you have coverage in the DC area. And again, this is where I have emphasized that if you waive and then are unhappy with your plan, you can't easily get back into the premier plan unless you're involuntarily dropped due to age or employment. Yes?
Just a not unrelated question, what is the patient balance?
So the patient balance would be equivalent to maybe that 20%.
Oh, okay.
So the plan may pay 80%, you're responsible for 20. So when you're within the PPO network, those PPO providers, the doctors and hospitals, bill the insurance company for you, and you don't have to pay that 20% until later. So then they will bill that patient balance to you. They've gotten their 80%, and now they want their 20%, the doctors and hospitals.
Does that include the copay?
Well, the copay conceptually is collected at the beginning, but that doesn't always happen. So sometimes, they don't want to collect it and then it'll end up later. But conceptually, they do it up front.
Is there a way we can go online and see like how much we're supposed to pay?
So if you have a claim, on your insurance side, you can see what's been sent and what they have decided to do about that. And if there's any pending claims because they might need more information, they might want to know whether it was an automobile accident and maybe the automobile insurance needs to pay instead of them. So you should look at that, but then you'll get a bill from your provider as well, and you should put the two together. And so you need to call your provider to find out what outstanding bills there might be, because bills can be very complicated. You might have a bill for an x-ray, and that might be a separate bill from the bill for your doctor's visit. And so they come in different statements. They're just totally different statements. They're not all together. So you just have to keep an eye on all of that.
So provider in this case would be like the Georgetown Health Center.
This Georgetown MedStar. So they send out bills.
Okay.
Under this plan, there's probably not much, but on another plan they would.
Okay, so I should call them and see if I have it.
Yes,
Okay.
yes. Or MedStar specifically, billing office. They might give you another number to call.
Okay.
And we have, I think, one or two more slides. What if I'm uninsured and don't want the university plan? Undergraduates taking 9 or more credit hours in a degree program must be insured. Your waiver application is subject to the Student Code of Conduct. Failure to be insured could result in a school record of misconduct, medical claim, financial obligations that disrupt obtaining a degree, a car, or home loans, and or federal fines during tax filing. So as you're supposed to have health insurance that meets the ACA rules. And when you file taxes, they ask about that. Yes?
So just one question about the ACA. So does the ACA also apply to international students?
No.
They don't
ACA
file-
doesn't apply to international
Because
students.
they don't file federal income taxes, correct? Or if they do, that's whether the fines are on our federal income
I mean,
taxes.
they might, if you have a job, they might ask about it, and you're here as a permanent residence and things like that. But I would not be overly concerned about that.
If you have any questions, the OGS would probably, the Office of Global Services would probably be able to answer that question.
Okay, thank you.
And if you have more questions, because we are running out of time, lots of contacts, information is on the back of this, and URLs. I think that's it, that is it. I had a different one earlier.
Thank you all for coming. Thank you for presenting, Laura, and
my
please take our
pleasure.
pizza. And please come to other events. You can also follow us on Twitter, Facebook, and Instagram at GU Common Sense. And have a good.
Thanks so much.